The job description of a loan officer focuses on evaluating, authorizing, or recommending approval of loan applications for individuals and businesses. Loan officers serve as a critical bridge between financial institutions and clients seeking credit for various purposes, be it purchasing a home, financing a car, supporting a business expansion, or consolidating debts. Their job is to assess the creditworthiness of borrowers, guide them through the lending process, and ensure that all transactions comply with regulatory and institutional guidelines. Working in banks, credit unions, mortgage companies, or other lending institutions, loan officers must possess a blend of financial expertise, interpersonal communication skills, and analytical ability. They interact directly with clients to collect financial information, explain available loan products, and help determine the most suitable lending option based on individual needs and circumstances. Whether dealing with a first-time homebuyer or a seasoned business owner, a loan officer's guidance can shape major financial decisions. In many financial organizations, loan officers are also responsible for generating new business by identifying prospective clients and building relationships with real estate agents, attorneys, or business consultants. In this capacity, they are not just assessors of risk, they are also ambassadors for the institution they represent, balancing customer service with sound financial judgment. Core responsibilities of a loan officer. At the heart of the loan officer's role is loan origination. This process begins with evaluating a client's needs and ends with recommending, approving, or declining an application. During the initial phase, loan officers meet with applicants to collect financial documents such as income statements, tax returns, credit histories, and identification. They then use this information to determine whether the applicant qualifies for the requested loan and under what terms. A major responsibility is conducting credit analysis. Loan officers evaluate credit reports, debt-to-income ratios, employment stability, and collateral, when applicable. They use underwriting guidelines provided by their institution or regulatory body to assess risk and determine the viability of the loan. This step is essential for protecting the lender's interests and minimizing the risk of default. Loan officers must also explain the terms and conditions of loans clearly to borrowers. They break down interest rates, repayment schedules, penalties, fees, and any other critical terms. This ensures that borrowers fully understand their financial obligations before committing to a loan. Once a loan application is submitted, loan officers review it for completeness and accuracy before submitting it to underwriting or loan processing teams. In some institutions, particularly smaller banks or credit unions, the loan officer may also act as the underwriter and make final decisions. Maintaining accurate and detailed documentation is crucial. Loan officers must ensure that all paperwork complies with legal and institutional standards. Errors or omissions can result in regulatory violations, delays, or even litigation. In addition to these operational duties, many loan officers are tasked with client acquisition and relationship building. They may contact existing or potential clients to promote loan products, attend community events, or collaborate with real estate agents or business consultants to generate referrals. In this way, loan officers contribute to the overall growth of their organization. Midway through understanding these responsibilities, it is clear that the job description of a loan officer is multifaceted. It involves financial analysis, regulatory compliance, customer service, and business development. Essential skills and competencies. A successful loan officer must possess a well-rounded skill set that spans both technical and interpersonal competencies. Analytical thinking is at the core of the role. Loan officers must be capable of reviewing complex financial data, assessing risk accurately, and making well-informed decisions. This requires a thorough understanding of credit principles, lending policies, and economic indicators. Attention to detail is another key attribute. Financial data must be reviewed with precision, and all documentation must be completed without error. A single oversight could lead to loan denial, client dissatisfaction, or regulatory penalties. Interpersonal communication skills are indispensable. Loan officers must listen actively, ask the right questions, and explain financial concepts in simple, understandable terms. Whether guiding a nervous applicant through their first mortgage or assisting a business owner with a line of credit, empathy and clarity are crucial. Sales and negotiation skills are also beneficial, especially for loan officers working in competitive or commission-based environments. The ability to persuade clients to choose their institution, close deals, or tailor loan products to meet specific needs adds value to the organization. Time management and organization are vital, as loan officers often handle multiple applications simultaneously. They must prioritize tasks, follow up with clients, meet deadlines, and coordinate with internal departments such as underwriting, legal, and processing teams. Technical proficiency is important as well. Loan officers regularly use financial software, databases, and spreadsheets to manage loan information. Familiarity with loan origination systems, loss, CRM tools, and digital documentation platforms helps streamline workflows and improve productivity. Finally, a strong ethical foundation is essential. Loan officers handle sensitive financial data and must adhere to strict confidentiality, transparency, and compliance standards. Upholding integrity builds trust with clients and ensures long-term career success. Work environment and common challenges. Loan officers work in a range of settings, including corporate offices, bank branches, and even remotely in today's digital environment. They often divide their time between desk-based analysis and client meetings. In mortgage lending, for instance, loan officers may visit clients' homes or attend open houses. In commercial lending, they may meet business owners on site to better understand operations and financial needs. The work schedule can vary. While many loan officers maintain standard business hours, those in mortgage or consumer lending may work evenings or weekends to accommodate client availability. The pace can be intense during peak lending seasons or interest rate fluctuations, requiring adaptability and stamina. One of the most significant challenges is dealing with loan rejections or difficult client conversations. Not every applicant qualifies for a loan, and loan officers must deliver bad news tactfully and provide constructive feedback or alternative solutions when possible. Another challenge is keeping up with evolving regulations. Financial institutions operate under strict compliance mandates, and loan officers must remain current on laws related to fair lending, anti-money laundering, and data privacy. Continuous education and adherence to protocol are non-negotiable. Economic fluctuations also affect the loan officer's environment. During downturns or periods of rising interest rates, loan volumes may decline, requiring loan officers to be more proactive in generating leads and retaining customers. Despite these challenges, many loan officers find the role rewarding due to the opportunity to help people achieve significant life goals, such as buying a home, starting a business, or recovering from debt. The role also offers performance incentives, career advancement, and a chance to develop deep expertise in the financial services industry. Education, training, and career progression. Most loan officer positions require a bachelor's degree in finance, economics, business administration, or a related field. However, some institutions hire candidates with strong customer service or sales backgrounds and provide on-the-job training. In the United States, mortgage loan officers are required to be licensed through the nationwide multi-state licensing system, NMLS. This includes passing background checks, completing pre-licensing education, and passing the Safe Mortgage Loan Originator test. Training programs may cover credit analysis, loan structuring, regulatory compliance, and sales techniques. Continuing education is often mandatory, especially for those working with regulated products like mortgages or business loans. Career progression for loan officers can lead to senior positions such as loan manager, credit manager, underwriting supervisor, or branch manager. With experience, some may specialize in high-value lending areas such as commercial real estate, equipment finance, or agricultural loans. Others move into related fields such as financial advising, risk analysis, or wealth management. The skills developed as a loan officer, financial literacy, customer engagement, and regulatory knowledge, create a strong foundation for diverse career paths within the financial industry. Conclusion. The job description of a loan officer reveals a role that blends financial expertise with human interaction and strategic thinking. These professionals assess risk, support clients in making life-changing financial decisions, and ensure compliance with institutional and legal standards. They are trusted advisors, meticulous analysts, and proactive problem solvers. Loan officers are essential to the flow of credit and the stability of financial systems. Whether working with individuals seeking mortgages or businesses applying for expansion capital, they help fuel economic activity by facilitating access to funding. For individuals with a passion for finance, a commitment to service, and the discipline to manage both people and numbers, a career as a loan officer offers impact, opportunity, and continuous growth. It is a role where professionalism, empathy, and diligence come together to make meaningful contributions in the lives of others.